Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at the YM in particular and how it unfolded yesterday on the 19th of January. As this was an absolutely perfect example of multi-time frame analysis. This is what I've been talking about in recent videos, and how we're moving away from our STF color-coded indicator because that's lagging, to use our DPs and our pattern on our higher time frame charts. I've been looking at this in great detail over the last years basically. So let's have a look at this, and this is very relevant because the setup I want to look at is this TS1 cell, and this was very relevant because I was looking at this live in our training webinar yesterday. So this was being looked at as it was actually in the process of unfolding. Right, so what do? Well, as per normal, we go to the higher time frame chart. This is normally a chart between 3 and 5 time frames higher. So if you're trading a daily chart, you'd go to the weekly. If you're trading, say, a 15-minute forex, you'd go out to the hourly. This case, I was looking at a 3-minute YM, so I'd go out to the 15-minute chart. And we look to see what the picture is doing on the higher time frame chart. Now, this has to be couched in the backdrop of what I call the cyclical nature of trading. In other words, markets go in cycles. This is something that many amateur traders don't really understand and appreciate, is that patterns in the markets are not clear all the time. In other words, you shouldn't be trading all the time. About half the time, yes, 50% of the time, the market's unclear, particularly on the larger degree pattern, and therefore you should not be trading. Half the time the pattern's clear, and then you can get a clear idea of what the large degree trend is, and then you can take trades. The idea that you should trade every single day is completely, frankly, rubbish, and is something that you shouldn't be doing. You should only trade when the pattern's clear. For me, that seems to be obvious. So let's have a look at what the pattern was yesterday. Well, here we had, just on the open, you see we had a TS3 sell printed here. Now, this wasn't printed until a little bit later, until that red sell bar came in. So if I do our training mode, I want to show what it looked like when I was doing the analysis in our room yesterday. It looked like this. So no TS3 sell yet. However, we wanted to look at this pattern. So for this, we right mouse click over the pivot high, we do Elliott wave intermediate, and we let MTPredictor analyze the pattern, and if there's an Elliott wave pattern, it will then put it on the chart. If there isn't, it won't. Now, this looked quite good because this looked like an ABC, but in particular, do you see how the high yesterday was right at the typical wave C WPT? In other words, this high was right at the ideal place where a wave C high is likely to end, and therefore I looked at this and thought 15-minute chart, largely trend is down. Where is it down to? Well, normally the trend should go all the way down to the DP off the start of the ABC sequence, right the way down here. But we also have a pivot low here, which is the DP off the minor wave B, and that's an area where the market is probably going to find minor support and resistance. So can you see how the 15-minute chart set up the high here and then set up two potential support zones? Let's now exit replay, and you can see the market went down nicely into that first DP support zone. But I was looking at that at the time before the market had got down there. So let's have a look at how you would have then traded the 3-minute signals. Well, let's now take it back to with training mode. We'll go back to just about here, we'll say. We know that that's a 15-minute high, so therefore we're looking for the market to make sell signals. We'll go forward. We have a TS1 sell come in here. Remember, we're ignoring the STF color. We don't use this, so I'll actually just take that off the viewable area. Let's place the analysis on here. We set up a potential trade. Remember, we use correct position sizing to keep our initial risk small and under control. This case, less than a 2% risk on a 20,000 sample account. Go forward one bar. It just clipped in, so it's very there's a debate on whether you would have actually got filled there, on how quickly you could have got your order in. But let's take the worst case scenario. You got taken in, taken out in the very same bar. That would have been a -1 hour loss. We actually couch these in what we call risk units, because that's what we're risking, 1 risk unit per trade. So that would be a -1 hour loss. Remember, losses can, will, and do happen. I want to stress that again. Any professional trader will know that any system or approach will have losing trades. The trick is to keep those losses small, and that's what we do with position sizing. We then move forward. Another TS1 sell setup appears. Remember, large view trend is still down. We're looking to do the analysis on this. This looks good, like a good trade setup. But this is actually a special trade setup. Why? Because this high here on our 15-minute chart was at a wave C, or a very good high. So we look at that and think that's what we call an important high. It needn't be a wave C high on the 15-minute chart, it could be at DP resistance. The point being is that it's at higher time frame resistance. So this is where my unique isolation approach to Elliott wave comes in. Again, because of the cyclical nature of trading, markets go through periods when their patterns are clear, and also in periods when the patterns are not clear. That is why I don't believe you should use Elliott wave all the time, like it's traditionally taught, because quite frankly you'll get in a mess about half the time when the pattern's unclear. So this is why I developed my unique isolation approach, so we only look at Elliott wave patterns when the pattern is clear, and then only for trade setup. So this would be deemed an important high, i.e. the start of the sequence. The initial decline down would be wave 1, the initial correction up would be a wave 2. After a wave 2, we then anticipate a wave 3. So rather than going to this first target, we drag this down to this particular level, the typical wave 3 WPT. That's why it's on the chart. And then suddenly, can you see how this looks to be a very good trade indeed? Remember, 1 hour risk, and the return is a potential 7 hour profit. We move forward, we're filled, and we come on down here, and this is about where I was looking at this in the webinar yesterday, so before it had got down to the target. Let's turn training mode off and see the result. We had a couple of attempts at buy setups. Now these would have been against our large degree uptrend, because I've already discussed on the 15-minute chart this up here was a wave C high, therefore the large degree trend was deemed to be down. As such, you should be looking to keep your short trades into at least this typical wave 3 WPT target. I did actually discuss at the time, if you're worried about this and concerned, you could bring your stop to break even once you'd gone past the 100% initial risk level, which would have been at 60.60 here, and of course that was never touched, so your short trade would have carried on. So the result would have been a very nice 7 hour profit. So minus 1 hour loss to start with, small loss, then a 7 hour or big profit. This is the whole idea of what MTPredictor is all about. Not trading all the time, only trading when the pattern's clear, and then looking to have trades where the profits are much larger than the losses. So avoiding these two buy setups here. As the market came down, you may have wanted to, well, you knew that this 15-minute DP support was here. I've already discussed that. So you might want to have perhaps run it down into that support level. If you had, that would have increased your profit to 8.4R. Or you might have looked at this and said, well, actually the STF is actually strong, so you want to use your ATR stop, which is our red dots. So you'd have been stopped out here at plus 7.4. So both of those would have increased your profit. But again, let's take the worst case scenario, and let's just call that plus 7R. So that is a very good example of what MTPredictor is all about. Large profits and small losses. Later in the day, there was a DP buy setup here. You can see this was in and around where this 15-minute support was coming in. If we go back to the 15-minute chart, you can see that the bars, or the 15-minute bars here, had not made 2 consecutive closes below the DP. Therefore, support was deemed to be coming in. So on the 3-minute chart, if you'd been really aggressive and wanted to, you could have taken this DP buy here. Remember, the STF color we ignore because it's lagging. The DPs we use because they're leading on the chart in advance, as you've seen. Let's place the analysis on here. There we go, over that blue buy bar. Analysis there. You would have had a nice trade into the first target for another plus 2.7R. So here we are. One short trade off what was pretty much the high of the day. That was almost a double top. We had a little losing trade earlier. Down into support zone down here. And then we had another trade, a buy setup off the very bar of the low of the day for a plus 2.7R. We wouldn't have looked to trail this because the strength band was not exceeded by the STF, so we'd have probably just come out at plus 2.7R. So that would have been minus 1, plus 7, plus 2.7, so that would have been an 8.7R day. So a very, very, very good day. And the reason I wanted to do this video today was to show you yet again why we do MTPredictor in the way we do, and that we're not just simply looking to trade every setup on the chart. That's not what we do. These are only potential ones to be evaluated. to be evaluated in the context of the large degree trend. We know and accept, because of the cyclical nature of trading, that half the time the markets are unclear, therefore we shouldn't be trading. Half the time it's clear, and then you look to the larger degree chart. If the large degree chart has then got a nice clear clean pattern like we had here, this is either at DP support or resistance, or we have a nice Elliott wave pattern as found on the Elliott wave tool. Again, this has to be looking good. It has to be a nice clear clean pattern. We then look to trade in the direction of that large degree trend on the shorter time frame. Again, my favorite trade setup is the Holy Grail trade setup. It's one of my two favorite trade setups, where we look to come off an important high, wave 1, wave 2, therefore we're anticipating a wave 3, which is the strongest, longest wave in a completed 5-wave sequence, and therefore has the largest profit potential for the smallest initial risk. So this is why I like this particular trade setup, because it has a large profit potential in relation to the initial risk. The other trade setup I like is the VS, or the volume spike, which we'll probably have a look at in another video. So hopefully this has been a good example to show you again how we use the multi-time frame analysis in MTPredictor, and to show how we had quite frankly a very good day yesterday on the YM with this brilliant Holy Grail short. And again, we were actually looking at this live in the training webinar yesterday before it got down there to the first target.